How much, if at all, do these kinds of market swings and recent volatility change your economic forecasting?
Well, I mean, I think mostly it is, affecting the view people have on the Fed, right? Because monetary policy has to consider how much further they want to tighten. And, they will have seen the swings in the market, but markets probably have seen, what happened to PPI, the cost pressures on inflation. And that is probably what affects people's perception of the Fed, how much it could do further. And it affects, of course, the dollar.
Okay, and what do you think is the most important of the things that you just laid out there? Which one or two we really need to be digging into and focusing on the most, Christian?
Look, I think, people will have noted that the dollar basket now has reached a high it last has reached, I think, in mid-17. So, even though the U.S. is more, much more closed economy than, for example, Europe is, as you mentioned, it will affect earnings over time. And people will be concerned whether, if we have a situation where the U.S. decouples further, in particular with regard to inflation and monetary policy, you see a dollar consistently rising further, possibly going beyond that 100 in the basket. And I think that is probably concerning equity markets at the moment as well.
Yeah, because you got to factor in the fact that, especially for the Dow, maybe not the smaller caps here in America, they sell stuff. The S&P, about half the sales of the companies are around the world. So how much does a stronger dollar impact those kinds of numbers and therefore the stock market?
Yeah, I mean, this is, in a way, I think what people are fearing. And you have the dollar combined with potentially higher tariffs. I think this is, in a way, what markets, to some extent, I think, have been ignoring. And, obviously, we have a lot of tariffs that could be coming up in or going higher in January. So far, for example, we have not really seen the fallout from the Chinese tariffs, which could be going from 10% to 25%, and possibly could be broadened to include another $260 billion of US dollars worth of imports from China. So, these things, I think, are something that markets are now considering. Midterms are over, and people wondering about the 2019 outlook for earnings. They wonder about growth. Could it weaken as we project in the second half of next year, et cetera?
I know you're not an equity analyst, okay, Christian, but I want to. We keep asking people when markets go down, why is the market falling? Why is the market falling? I want to flip it because the stuff you just laid out, I think, maybe tells a different story. The Dow is up 2% this year. Not a great year, but it's still higher in the face of the Fed raising rates, the Fed delevering its balance sheet, the dollar rising, and tariffs, and a trade fight out there. Is there a way to flip the script and say, wow, it's actually kind of amazing we're still even slightly higher given everything that you just laid out?
And actually, I would add to this, the Dow is higher with almost every other index around the world being lower. People who invested in China or in the German DAX or elsewhere have been suffering. So clearly, the U.S. stands out, even though, in the recent weeks, obviously, we had a lot of retracement. Look, I think overall, I would still think that the U.S. equity story is a strong one. Earnings have been good. The economy is growing at 3%. There has been deregulation. There have been tax cuts. I wouldn't say that was fully unjustified. Very interesting. Yesterday I had a discussion with Robert Shiller, the kind of inventor of the CAPE index, and we had a discussion with clients. And he said CAPE now, the index, the ratio of cyclical adjusted PE is around 30, could be falling down, which just indicates we are not overheating. There's no risk of a bigger crash, but it's an elevated ratio. And I think markets have come to that realization. And maybe now we are more in a kind of a normal environment where expectations for future earnings have been adjusting. At the same time, I don't think there's really reason to fear that there could be a bigger crash going forward in the U.S.